I want to speak to Moritz Kraemer, head of European sovereign ratings at Standard & Poor's. Thank you very much indeed for speaking to us. So let me start by asking you about your view on France's top-tier credit rating. Do you think that France deserves this sort of status given the size of its budget deficit, given the pace of increase in its debt and the fact that it can't devalue its currency?
Well, you will not be surprised if I say yes, we think it does deserve it, because that's the current rating that we give to the French Republic. It's also noteworthy that we have a stable outlook on the rating at this point. As many viewers will be aware, as a rating agency, we signal potential downgrade pressure by changing the outlook to negative, which was the case actually in the US since April. Right now in France, the outlook remains stable at what we currently can see. We think this is warranted. However, as always, we will continue to watch the deliberations in the political sphere and into and especially also after the presidential elections that are coming up, to assess what is the political strategy to reverse the rising debt ratio that we're currently observing.
Well, so tell me now then, what does France need to do in order to maintain and safeguard its top-tier rating?
Well, we will assess France just like any other of the 120 sovereigns that we globally rate, according to our methodology, according to our criteria, which is in the public domain, and anyone can try to assess the credit rating on the basis of that information. What is clearly, and what you spelled out in the introduction as well, what is the main challenge is public finances. Public finances in the Eurozone are particularly important because also, as you rightly stated, there is no possibility to use monetary policy or let alone exchange rate policy in the way that an independent currency could, like in the UK or even in the US. So therefore the trajectory of public finances and the budgetary strategy pursued by this government and by the government that might follow the elections is of tantamount importance.
And it's interesting, you mention the fact that a country like France can't actually use its exchange rate to boost its situation. Debt is very much a concern. And I suppose that is perhaps something that has many investors, traders, analysts scratching their heads, because if you compare the conditions of France and the US, for example, some would think, how can you think that France is less of a credit risk than the US?
Well, right, the first thing to keep in mind is that the credit rating of the United States is AA+, which historically coincides with a pretty much zero probability of default, and that's a very important thing to keep in mind. The question is best answered, I guess, by reflecting on the reasons behind the downgrade of the US. And the reason behind the downgrade of the US was that we came to the conclusion after the wrangling and the political discussions and battles, I should say, over the last few weeks, that the political system is not as effective in resolving potential financial and liquidity problems at the central government level, as is customary for AAAs. Don't forget that until sort of really days and almost within a day of liquidity problems, certain powerful groups within Congress were holding the possibility of a sovereign default up as a weapon in the partisan battle. That is something that we don't see in France or any other of the AAA countries that we do rate.
Speaking about political difficulties in the US, I mean, I'm not drawing any parallels here, but nevertheless, 2012 is a presidential election year in France. Do you think that there will be some obstacles to implementing the type of long-term reforms that are needed to bring public finances back under some control, precisely because they will be unpopular?
Right. The electoral calendar plays a role in every democracy, and it's not customary, I should say, that right before elections, deep cuts into popular expenditure programs are being taken. However, don't forget that France has a certain track record of when the political will is in place to actually engage in meaningful and lasting reforms. The best example of that is the pension reform that has passed last year, and which is, in our view, a very solid reform.
Okay.
And that contrasts actually with what we see in the unwillingness to cut into entitlements in the United States. So I wouldn't be quite as downbeat, but the challenges are rising. I would
Moritz
not
Kraemer of
contest that.
Standard & Poor's, wonderful to talk to you. Thank you very much.